So the question is, what we need to do as an ecosystem to anticipate the threats. And maybe, I mean, starting from regulation. So the question is, I think we have also discussed yesterday, you also see so regulation is increasingly present, and this is a trend that is going to continue. The question is, how far do you think this is going to go? Is this because banks are, of course, regulated, they have to comply with regulation? Do you think that this is now touching more companies active in the financial services space? Actually, I think we've seen examples over the globe. So, what do we think? I mean, maybe we start with Jarosław.
I think that, of course, all of us can hear the voices like banks are over-regulated, and the level of regulations really kills at least some areas and some businesses we used to do, like offering investment products and brokerage or payments or offering third-party products becomes more and more difficult under new regulatory regime we have. And people say, wow, there is a regulatory arbitrage because they are the companies who are just only payment companies, only brokerage or whatever, and they don't have this regulation. So our way of thinking is like when they will get the regulation as we do, yeah. And my answer is never. They will never get it, and the reason is one: banking license is needed only for one product, one and only product, which is like paying interest on deposits of people. If you don't want to offer this product, you don't have to have the license and you don't have to have a heavy regulation. Of course, like you say, like, wow, if I don't offer interest-bearing deposit, I'm not a bank, I cannot build my balance sheet, I cannot build my lending because I have no money. Yeah, that's true. But as long as actually you decide to take your license to do this product, you have to understand that all other products, like even things we think it's like DNA of banking payments or brokerage offering investment products. Sorry, it's like it's not your core. It's not what you took a license for. So then you are in the situation you will have to cope with a very heavy regulations to protect people's money, savings on the companies, savings on the people, because this is the regulation is for.
Agreed. The question is, banks are always going to be more regulated than other companies. The question is how much regulation is going to go into the direction of regulating other companies. Let's say we discussed about buy now pay later yesterday.
I was actually, analyzing regulation. It's not maybe up to date, but also analyzing the regulation that was made after Lehman Brothers in Polish industry. 95% of regulations is applying to safe of deposits because everything they put on your balance sheet like lending is because you are funding lending from like private people deposits and small business deposits. So like if people say, wow, where it's going to go elsewhere, it's like if 95% is related to that, these regulations will never come to these guys. Maybe they can be a little bit more safe on like data protection but at the end of the day, payments is not that sensitive. If you fail on payments, you will not like bankrupt 1 million Greek families like you can do if the bank will really collapse. So I think like this part of regulation, which is like majority 95% plus, will never go. So unless we want to be in the territories of the, I would say, non-balance sheet products, being the bank will always be in this negative regulatory arbiter.
Point taken. Just one note. I think we need to discuss it later on to what you just mentioned. I think we have a very good example of what can happen even if a bank doesn't fail in Europe. So the Wirecard scandal, even though it was not a bank as you said, the consequences were quite significant. So let's keep it because we have to have it as a thought. So Terry, what do you think? Do you have a different view, or you think that regulation is gonna so the gap between non-regulated entities and the banks is gonna close?
It's a lot of debate right now. What to do about the shadow financial system? and it ends up to policy pressures. Who has the greatest lobby right now in Brussels to push forward or backward some sort of regulation, even in payments or in the shadow financial system, which are the main competitors of banks. Yes, banks will always be the first corporation where this every new rule will be imposed because of the deposits. Yes, it's sad, but it's true. The regulators have one thing in mind: how to protect the deposits in the system. All of these capital regimes, all of the extra capital, the deposit guarantee schemes, and how much money the banks should invest in products outside traditional lending. All of these restrictions have one goal in mind. When you come to other industries, like investment funds or something like that, or payments, the regulation, they have mainly market imposed regulations where you have to perform a profiling of your client in order to let him invest in fancy products and something like that. I think that this separation is crucial. You have to, if you don't educate your clients in order to use all the financial system inside or outside the core, then you have to begin to restrict them from using other parts of the industry and lose their money. Because at the end of the day, don't forget that people that lose their money, they tend to go outside politicians' offices, and after that, they all together go outside the bank and say, let's burn the witches in the bank. We have paid it a lot here in Greece. Everyone in the early years of the Greek sovereign and then private sector crisis in 2010 to 15, everyone tend to blame banks almost for everything.
Belma, what is your view, your take on what's the experience so far on how non-entities have been regulated? Let's say payment companies, other companies. What do you think?
First of all, I want just to refer to the previous question. So in the sustainable ecosystem, we also need to have more regulations on the side of our clients. And why? Because in our experience, and I think that yesterday someone mentioned that a lot of threats are coming from the side of our clients to whom we are working, and they are using our digital services. So basically, we see that upcoming regulations are tackling third-party risks, but also we need to have the regulations on the side of the I would say service providers, outsourcers, and our clients to whom we are working. So referring to your second fix. So it's something that there is no, I would say, there's no experience. So in tackling with different threats, it's something that we should use to learn from.
But for example, going back to my point, if we take, let's say, the example of Wirecard and how it failed in Germany, one of the biggest markets in Europe, then obviously something went wrong. And the regulators were not, let's say, vigilant enough to understand the threat. When they did, it was quite late. Now they have taken the opposite view. So, and then Jarosław can continue.
Yeah, he can continue, but in general, we during the such a case, we all use from the experience. We can only take the lessons and learn and add measures in our environment. So yes, in some points there is different, I would say, views and approaches from regulatory and from the victim side. So and we are not in position to know the real truth. So we can take the I would say conclusions from both sides and see what is the most, I would say, appropriate to make some kind of conclusions in our environment.
Thank you. Jarosław?
Yeah, I would like to address this case you mentioned because it's a very good case. Because it was large company, large market. And what happened? You properly name it scandal. Like, scandal is something which, like, people get excited. You have it on the press for a few days, then it's gone because it has no impact on people. It's no impact on the economy. Imagine like this size of the bank would collapse. Like what sort of the effects you would have on economy of people keeping their money, companies having their money. Take a look at like the collapse of this California bank. That's going to be the very good case. Completely different effect. You have always global thing. People think if it fails in California, maybe it fails in Greece and fails something. Like these companies don't have this economical impact. So they will never be regulated like that. And coming back to what failed there, I mean, guys, the people there cook the books and auditors sign it. They failed because they were claiming they have lots of money somewhere in Dubai and auditor was signing it. It could happen to bank as well if like we would find the guys in a bank that won't cook the books and actually auditor is signing it in. So the failure of that, it was not a regulator. The failure was the auditing system and trust in auditing system, because if auditor comes and saying, you know, the easiest thing you can check, if the company has money on the account, like, and it failed. So like we should like a little bit make a reflection like why we trust all of these Deloitte, PwC, etc., etc. They should pay the bill because they are rich companies for what happened.
So you think the regulator was not to blame here?
You know how regulator could actually replace the auditors, and because at the end of the day you can say, if you say regulator can like be responsible for everything, then they will manipulate with everything, yeah, because they will like, get terrified. So like we have to trust in capacities and moral integrity of the management. We have to trust in shareholders of the bank that they also like make a control. We have to trust in auditors that actually, you know, they are signing. We as a bank trust in auditors. Like, do you go and check if the company has like, I don't know, money on money, you can check, right? Okay. If they have a property or they have assets they have on balance sheet, do you check after PwC once they sign? No, you just put a trust in the auditing system. And that's what happened there. Because like these people were healthy, as long as it appeared like they don't have the money that people signed, they actually have. The money disappeared. What was funny, nobody even know for like 1 month and could explain where it disappeared, yeah?
So Thierry, what are the learnings from Wirecard, and then we move on for you?
I agree with my colleague. The regulator's job is to regulate, to set the rules, not to always...
but also to monitor, right?
The regulator monitors whatever you submit to them. They don't have access to your real books, and they They monitor the financial stability through, I think, 1,000 indexes inside the banks. So it's not easy to have 6,000 or 7,000 banks in the euro area, and just try to debate with every management that they have misstatements in their balance sheets. Then you have to then the ECB will hire 6,000 or 7,000 employees, one for every bank. That's not the purpose or the scope of the regulator. The regulator, yes, takes actions, put measures on the table, set the rules. It is our duty as bank employees first, then the management that runs every bank, and at the end of the day, the shareholders who will eventually lose their money if the business is gone, to ensure that all this system is appropriate managed.
Okay, understood. I think we discussed enough. Let's go to a different topic, which is again a very interesting one. So, Belma, third-party risks. So I think we have been discussing throughout these 2 days how much more important the partnerships have become. Vendors are much more important. So that means that you have an increased exposure of banks and companies to all kinds of parties, partners, integration softwares. I don't know. Can you give us a few examples how much more dangerous this has become in terms of security? Do you have a few examples of things going wrong, and what can be done to cope with this increased?
Yeah. Comparing these days with, I would say, just 2 years ago, we increased our outsourced portfolio for more than 70%. Yes, 70, yeah. So we have our strategy actually moved from internal services to external.
Sorry, why did you do this? Just out of curiosity.
Why?
Yes.
Because of the, I would say, cost, and we during the decision, the cost side was prevailed to externals, and also some kind of fact that we started to losing our resources and our capacity internal, and we moved much on third-party services. So our third-party risks increased.
Sorry, are you confident? So because taking a decision on the one hand side is the cost effectiveness, on the other hand side is the risk, the compliance, the data sharing. So you are confident?
Yeah, it was decision. So decision was made based on the assessing all risks, related risks. So yeah, currently we have more than 100 outsourcing services, and yes, risks are increased, but we have the risk management model in place in order to, I would say, not mitigate, but properly manage raising risks, and it's not. It is not rare that we have also the problems on the side of our vendors, but there is different contracts, obligations, insurance, and so on that could help to minimize those risks. So it's something that adds additional, I would say, it is not burden, but it's something that is on our backs right now.
So if you would have very quickly to summarize, what are the 1 or 2 things that you have done on top to address the increased level of outsourcing? So
regarding the outsourcing,
high level, what are these 2 actions on top to address the risk of?
Yeah, I would say first of all the access risks, so risks of providers' access to our systems, and the second one, the risks of I would say recovery time objectives, because it is really hard to agree with vendors according to our needs. So those risks are some. It's always always a matter of this negotiation.
Thank you. Jarosław, do you see this trend as well? So increasing outsourcing, how do you handle this?
I would actually no, outsourcing actually is not a subject in, especially in Europe. We hate outsourcing. We believe that everything we do internally is always much better. And actually, what I like about this kind of questions, like, wow, do we see risk of third party? Do we see a risk of internal services? That's the first question, because there's a change. And people say, wow, if we do it internally, there is no risk. And if we give it to external vendor, risk pop, pop, pop. You know, I was doing a couple of outsourcings. And my experience is like, process becomes transparent. All of a sudden we control, because wow, that's external vendor. We'll check everything, we'll send audits. When it's our colleague managing a team of 20 people, we are not that like, yeah, but how I can challenge him? It's like I have to trust him. He's my colleague from my work. Yeah. So like what I think is not that I think we overemphasize third party risk, but at the end of the day, we manage it. Why is it difficult to talk to vendors about certain things? Because they know they have to deliver and you will check. That's they are negotiating so much. With internal services, everybody will say, well, nothing is possible or everything is possible, because at the end of the day, we are consumers of internal services. All of you are. So you know what it means to be like internally serviced, and service I would put in the quoted dots.
Interesting view. Sotiri, do you agree? So are you comfortable also, I mean, or even happier than what you are with internal processes?
Outsourcing is a reality in the banking system, and for small and medium banks will become more demand. As my point of view, I would like to focus mainly on the legal risk at the end of at the beginning of the outsourcing process. You have to document everything right, all the clauses, or everything that you want to be delivered must be on the contract. And at the end of the day, you have always set up an exit strategy.
It is a good thing or a bad thing? I guess
it's a good thing.
Okay.
Okay, it's a good thing because at the end of the day, you have to be inside the competition. So it's you have to find ways to cut your costs as much as it hurts, but at the end of the day, if you if you don't set the rules, management will get over you and decide without you.
So, to your experience, to summarize, you see also an increasing trend of outsourcing. You also feel that you can manage the right. This implies some additional work on your behalf to document it, to have an exit plan, etc. But it's a reality.
Now it's much more. It has emerged as a need that you have a fully compliance function, not only some people with checklists and or checking the AML system, something like that. You need to evolve and transform your compliance management to be more active in this part of controlling outsource risk. Risk management departments cannot do this by themselves. They are not lawyers. They're majority, and you can't even hire lawyers in the risk management department. Okay.
Normally, to my experience, there is an outsourcing department or person within risk managing these relationships, right?
Yeah, it's mainly
Or can be.
under the scope of the operational risk, but you need more experts. Here in Greece, we have a Governors Act that set up a set of rules and how to classify outsourcing, if it's critical or not.
Okay. Yeah, exactly. Okay. Jarosław, how has the management of risks for financial service organizations changed over the course of the past years? And what? So how has it changed from a threat point of view, and how has the practice internally changed? How are these being addressed from the organizations themselves? Do you see any change, or
No, I'm actually not monitoring about that much, how the risk organization is functioning. It's like, I think that when I started my banking career late 90s, the most powerful organization within the bank, it was like chief risk officer and the risk guys. Over last years, I see that they are completely dominated by internal audit and compliance. So they are like a little bit pushed. So I don't know how much it answers your question.
to give you an example? So, for example, let's say 10 or 15 years ago, this geopolitical aspect was not that intense. So, for example, we had a pandemic. There is a war in Europe happening that probably were not the norm, at least in Europe, years ago. Is this now something that the organizations need to address in a different way? And how does this impact the strategy as a whole?
I think that many organizations realize that. I know how much there was a famous general during the Gulf War that everybody was laughing at, because like they asked him like how he sees the risk of like offensive, and he said, "I'm not afraid of known unknowns. I'm afraid of unknown unknowns." And people were like laughing, but then they reflected. Actually, you mentioned it very properly. Today, after especially the pandemic, after war in Ukraine, so that things that you wouldn't consider in your risk plan because like, okay, like it was like impossible. Yeah, this was beyond our comprehension. And then people learn one thing which is very obvious. It's not like the species that could forecast the risk. The species that actually can accommodate what happened, they survive. So resilience. So the organization should refocus from trying to forecast what will happen and prepare for it into like making sure that whatever happens, being war, being whatever, we are like teaming together and we have resilience to do it. And I think all of you were through pandemic and all of you could see that despite you didn't have any contingency plan, anything like for pandemic, you have to completely transfer your organization like nobody's in the office, like within a month. Yeah. How resilient your organization are, despite no plans, no preparation, no war games before. If people thought it's important for the survival of my organization, my job, etc., things get organized and compliance start to be really, and like I observe process, I would never ever believe if someone would tell me it's possible in a bank. And that's important. Strengthening people resilience. So if anything happen, you can react on that and not waste time or like, okay, I will know what is the chance for the next war? What is the chance that Putin will put a bomb on Europe? I don't know. And it's like,
Belma, in your case, what has changed? How are you coping with this increased scope in your case?
I would say when I look back a few years ago before pandemic and before I would say the threats and incidents we faced recently, I would say that risk management practices are much evolved and in the sense of having integrated risk management. Why? Because for each analysis and scenarios, right now we are including all risk areas. You know, basically in the past we have the discussion on the retail risk, corporate risk, operational risk separately. But right now, when we are dealing with or known or unknown things, we are discussing and covering all kinds of risks. So basically, in the past, for example, cyber risks were treated only by us. No, right now we are talking about cyber risks on a corporate, on a bank level. So it brings us additional value, and as you mentioned, it is our resilience, so capabilities to consider everything what should be relevant in different scenarios. Yes.
Sotiri, in your case, what has changed for you? So how is the organization now treating things differently? Or it doesn't? I don't know. So I mean, so what I mean is what I mentioned before. So now that the nature of the threats and the risks has changed, then are you taking into account in your planning, and how has the structure internally within the bank?
All the past couple of years of bench, we realized that we have to break down our silos and trust all the other internal control units inside our organization. You can you have wonderful risk guys that talk to the management, but you ignore internal audit and compliance. At the end of the day, you have a poor internal control system. Nothing works. So you have to redesign your thinking and move from a department management level to a more holistic level. And how can these units add value to their organization? How can they bring forward a fresh look or an outside look from the pure business people?
So, I mean, and this is the last, maybe just a few words. So, if I understand it correctly, what has changed is that from, that all these threats are now not a purely risk or compliance topic, but they have become an organizational topic, an issue. So, it's not only for you or for Belma or for Jarosław, but for the entire company to understand and act as one to tackle the threat. So very quickly, because we don't have time, but if you could, say one last sentence, what would that be? And then do you agree? Is this right? The good summary?
Yes, I strongly agree. And as I mentioned in my presentation, focus on your people. Train them, believe in them, and help them become better. So they will give you all the feedback you need to help your management at the end of the day keep up the good work.
Thank you. Belma, what's your final?
Thanks. As an add-on, I would say that the risk management practices on the bank and organizational level evolve in parallel with new threats and digitalization technology, and I believe that it's success for the efficiently answer on everything what we will face in the future.
Thank you. Jarosław, final thought?
Actually, I only subscribe to what colleagues said. So if there are any questions, maybe we need some space for that.
Thank you very much. Thank you.
Thank you.